We're like, okay, what is the equivalent that we saw in tech, let's say, for example, with storage in financial services? Well, it's like, okay, storage costs crash in technology, and that leads to things like Hulu being readily available. Well, what about brokerage fee cost declines? 20 years ago, when you wanted to transact 100 shares at a full-service broker like Merrill Lynch, it was probably $80 to $150. Today, you can do that transaction on Motif for a hundredth of the cost. So we're absolutely seeing a crash in cost. The second is we're seeing an explosion think of them as endpoints, an explosion in the capability of endpoints, computers, smartphones, whatever you have it, to cause transactions to occur at any moment in time, right? Those 5.4 billion devices around the world are all transaction capable, and that's just mobility. That doesn't even include desktop. There are two more factors that we think are really critical that are driving financial services today. One is friction, like all forms of friction. So let me give you an example. So here's a simple consumer payment flow. What started out as a cash transaction 30 or 40 years ago, you went to a bank before 3 p.m. on a Friday because it wasn't open on the weekends, you took out all your cash, most things you didn't cash. Then you saw innovation in checking, that's fine. Then you saw credit cards. But we're at the point today, right, where when you take Uber, you just walk out of the car. Like that transaction occurs via an endpoint without even a human interaction. And the use of algorithms, right, an obvious one. Like today, there's so much more data applied to a problem, and the algorithms created to drive transaction flow is well beyond what it ever used to be in the past. Today, you have marketplace lenders, let's just take Lending Club, who use FICO, obviously, and education, and social signals, and heuristic data, right? There's like, some number, hundreds of fields that they all use in their underwriting criteria. And that's enabling dramatically more transaction flow. So if those fundamental dynamics are increasing transaction flow, let's go back to the four businesses. So think of it, remember, transfer value, equity ownership, credit, and event risk. So if you can increase the transaction value across those four industries, you're going to see growth in financial services.